Can everyone hear me? All right. Let me just check up on YouTube real quick too. Hello, hello. How's it going? We'll give it a few more minutes. Let everyone kind of come in. The day is going great, thank you. How's your day? Hello, hello. Can everyone on YouTube hear me fine? Alright, cool. We're gonna get started in about a few more minutes. Alright, cool. How's everyone's week going? Cool. Alright, let's go ahead and get started then. If you guys have any questions, feel free to put it into the chat. I'm going to move this to the side. We're going to do an entire analysis. So I already have the levels marked off here that I have from the weekly outlook, from the YouTube video that I posted. So I'm not really going to do the entire breakdown for that. We're just going to take a look at the levels, and then we're going to drop down to the daily time frame, go over how the candles were forming throughout the week and how we can take those trade opportunities. So we're going to do the simulation for this week because someone asked me to do a video on the entire breakdown, so I thought it would be a lot more beneficial for everyone else, whoever missed the trade opportunities. So these are the levels that we have marked off. Let me go ahead and pull up that video real quick. So we're not going to really watch it, but I'll just show you guys that specific part. Give me 1 second here. Alright, so it was this video here. So we have like the same exact levels marked off: 153,400, 153,800, 152,100, and obviously price dropped lower than that. So we're going to use the same exact levels and then continuation down from there. So on the daily time frame, pretty much what we had happening here was, let's do shapes. So we have an entire zone of consolidation that was being formed here. So this is kind of our area of liquidity. On higher time frames, just across the board for any pair in general. When you see consolidation being formed like this, or rejections or liquidity zones on higher time frames, especially daily time frame, weekly time frame, even 4-hour time frame, you'll see that there's going to be a lot of volatility that happens when you start dropping down to lower time frames. You'll see like massive wick rejections. You'll even see consolidation. You'll think that, you know, this is such a messy price action, but that's simply market getting ready for some bigger moves. This tends to happen when there's fundamentals coming out, important fundamentals, or if we've had an exhaustive move already. So in this case, we definitely did have an exhaustive move, and then we did have a couple of fundamentals that the market was trying to price in or getting ready for. So in this sense, all we're doing is simply looking at structure. That's all we're going to do in this simulation session. Keep it very simple. The very first thing I'm going to do is mark off the highs that price was making. We came back down, definitely created a low, right, pullback. So you see lower highs being formed and lower lows being formed. Pulls back down, so all of this definitely looks like, you know, messy price action, but just look at the lows being broken and the highs. Came back up, retested that area. There's a massive drop down, so obviously there's going to be some sort of pullback that happens. Again, same exact thing, a pullback, and then we had another nice sell-off happening. So in this, in the past like 4 days or whatever, you see a huge sell-off happening. Price obviously has to create support. We broke below this entire consolidation area here, where you see liquidity being generated. So we come back up, reject this area, and now this was the beginning of the week. This was Monday. This is when the outlook was put out. So this is what we were looking at, the current market conditions during that time. So now the entire analysis was, well, this is where we've seen wick rejections right into this area, right? And then if you look to the left, you also see this area being respected as resistance. So if we clear below this area and continue down, then we know that we're going to have nice sell opportunities to the downside, right? We're going to have nice sell opportunities at a minimum coming back down and tapping into these support areas. This is when you start looking for partial opportunities if you're trading off the 4-hour time frame or the daily time frame, and then you start looking for scaling opportunities to come back down and tap into that 152-100 area. I don't have the yearly time frame on the simulation, but if you go back up to like the 12-month time frame, quarterly time frames, you'll see that this is the same exact level that's being respected across higher time frames. So this is, even on the daily time frame, you see clear resistance being formed here. Same exact thing here, consolidation before you see the massive push up. Right? So we know that this is going to be a very important zone. If we break below this, then we'll have other sell opportunities, and that's when we start analyzing what are some of the support areas that we're going to be headed towards next. But right now, as of Monday, this is the only area that we're targeting. So partials down here, and then you have scaling opportunities coming down to 152-100. Does anyone have any questions about that so far? Alright, pretty clear. Cool. So now we're going to drop down to the 4-hour time frame and take a look at what's happening there. So on the daily time frame, we've seen 2 daily candles kind of closing in this area, hanging around in this overall zone between 153.800 and 153.400. That's about a 40 pip range, but that's where you have to make the decision of whether or not you're comfortable taking a trade there, or do you want to wait until price gives you all the confirmations that you need to take like about a 100 pip trade, or, you know, even if it's a 50 pip trade. So what do you value more? So when I drop down to the 4-hour time frame, we see that, okay, clearly there's consolidation being formed here. If we're going to look for any buy opportunities, we want to make sure that this 153.800 area is being broken above, especially on the 4-hour time frame and hourly time frames. We're getting some sort of break and retest there, and then a continuation back up from there if we're to look for a buy opportunity. If it just fakes out above that area, you know, something like this where price tries to break above but comes right back below the area, then we don't have a buy opportunity. Same exact thing here. We need to wait for some sort of confirmation, whether that's a break and retest candle, whether that's a bottom wick rejection, top wick rejection, whatever it is, and then taking our entry to the downside. So what I'm actually going to do is create another zone here. So this is a zone that I would mark off, that if I'm going to look for any sell opportunities, I want to make sure that price is clearing below this entire zone. I have a zone here specifically because if we just take a look at the candles below this area, you have support being formed right here, right? And then price kind of pulls back and then you have a massive sell-off happening. So you want to make sure that price clears below this, and then you can look for your sell opportunities. Same exact thing here. You have two wick rejections. You have a fake out right into this area and then continuation back up. This is where we have that break and retest and continuation down. And same exact thing here where price tried to break below, came back, closed like a bearish doji, and then we came right back into the zone. So if we clear out this area, then we start targeting some of these minor levels, and then ultimately 152, 100. Welcome back, Ian.
Hi, everybody.
Good to know you're alive.
I didn't even know that was Ian. I was like, who is that?
You know, I like that video that you did with Stefanos with the journal.
Oh, thank you. So same exact thing, even on the hourly time frame, we're just making sure that we're looking at the higher time frame down to lower time frame structure, right? So same exact thing, pulls back down. You're seeing lower lows being formed. You have market trying to pull back, more like a consolidation. So this is what we saw in the higher time frames. Pull back down. So ultimately we're coming back and we're just testing structure here. So same thing, if price is gonna, push back up from here, we want to make sure that we're looking for a clear break and retest and then a continuation down. But if price fails to do that, then we're gonna wait for our confirmations and then continuation down from here. So simple structure, simple break and retest, support resistance. That's all we're looking for here. Same thing on the 30-minute. So if usually my rule of thumb is if I'm doing the higher time frame down to lower time frame analysis, and from the weekly time frame, daily time frame, 4-hour time frame, 1-hour time frame, I know that price is in consolidation, then I probably won't be dropping down to the 30-minute because price isn't really doing much. It's not breaking out of the levels that I need it to, so I'm not going to be taking an entry during that time anyways. So I'd rather wait for like the hourly candles to finally break through and then look for those entries. And that's what we're going to do here. So we're going to go onto the hourly time frame. And we're going to wait for these candles to break. So sometimes you'll see a gap. This is a Monday. This is an Asian session actually. So more like Sunday. And this is where you see the gap happening because this is where the market just opened up. So we're going to give it some time and then we're going to let the markets break the levels clearly, give us some retest, and then take those entries. Again, if you guys have any questions, just feel free to put it into the chat and I'll get to it. We could check our time frames as well. And for the sake of time, eventually, like if we're still stuck in this area, I will skip a little bit just so we wait until the price finally broke out of the area and then look for sell entries, or where we could have looked for our entries. So I'm going to give it this 30-minute candle close and then see where price is headed. If it's still stuck in that area, then I will skip through. So that was market open gap. We came right back up to fill it. That's the 30-minute close. So I'm going to start skipping through on the hourly time frame until we see a clear break and retest and continuation of either zones. I use the same support resistance levels from higher time frames and down, and then if on the 30-minute, for example, if we were not in this consolidation, we were somewhere down here, then yeah, I would mark off the minor support resistance levels and then look. It would be mostly just for entry purposes. So my confirmation is going to come from the 30-minute time frame, and then if my 30-minute, 1 hour, and 4 hour in a line, then I will take the entry on the 15-minute time frame. But if I'm seeing, like, let's say for example, a bullish pressure on the 15-minute time frame, but on the 30-minute the candle is still rejecting some resistance areas, then I wouldn't be taking those entries. So let's skip through. So price still respecting that resistance zone that we have created there, still kind of stuck in this consolidation. So we're just simply consolidating that entire session. A wick fill is coming back down, and when the candle actually comes all the way down and it fills the actual wick, or it engulfs it. For example, here, that's the wick, and the following candle came all the way up, filled the wick, and even closed higher than that. Wicks are rejections. I pay more attention to the candle closes because that tells me where the volume was when those candles closed in that 15-minute, in that 30-minute time frame, whichever time frame that I'm looking at. And then wicks are telling me where the buyers and the sellers were rejected. So still consolidation. So obviously we wouldn't be trading that session. Again, this is a Monday. We're finally breaking above. Now that we're breaking above on the hourly time frame, I would want to see at least a bottom wick rejection on the hourly time frame, and then I can start dropping down to the 30-minute. So see how price just broke out of consolidation? There's clear volume that's happening. So you see that happening on a lower time frame, right? This is the same exact thing that's going to apply on higher time frames. So on the 30-minute here, for example, the market simply consolidated. Once it broke out of it, it made a bottom wick rejection and continued up. But we know from higher time frames, this entire zone that we have created, that that's a very strong resistance area. So whenever price breaks above this, we want to see some sort of pullback and then continuation up. So we want to see the most basic version of a bullish trend, where you have consolidation, a push up. So we want to see the most basic version, which is a pullback and then a continuation back up. If the price cannot give us a pullback, the chances are very soon it's going to get exhausted and then it's going to come right back down into the zone. And that's not something that we want to be a part of. And if you see the same exact consolidation, which we do see on the 4-hour time frame, so I will switch the time frames here shortly, but you're going to see the same exact thing happening across time frames. So on the 4-hour time frame, that consolidation just gives us confirmation that there's going to be a lot more volume, and for that reason we definitely need the lower time frames aligning with the higher time frame. So even on lower time frames, we need to see a pullback and then a continuation back up, and then another pullback and then another continuation back up. Without that, we do not have any confirmations for any sell opportunities. And so on the 4-hour time frame, same thing, where the price is trying to break above, but we don't have any confirmation just yet. We don't have any pullbacks happening just yet. So we're going to wait. We want to make sure that price is coming back down, rejecting these areas. Without that, still no entry. Everything's making sense so far?
Yes.
All right. Even for everyone on YouTube, everything's making sense so far? Never thought I would be saying this. Alright, so now we're coming back down. We're starting to reject these areas. Let's see if we're going to just continue pushing down or not. Alright, awesome. So now this is when I start looking into some more details, because yes, price is coming back up bullish. It's starting to create some sort of support. But now I'm looking at exactly where price is having trouble breaking above. So in this case, we have this minor resistance that's being formed by these candles, right? So you got that little minor resistance. The previous candle rejected that area, closed bearish, same exact thing here. And that's the same area that price is tapping into right now, right? So we did create a support here. This candle started off super bullish, but now we're respecting that resistance that's being made here. So apparently my simulator is on crack compared to other people's simulator, so I'm not really sure. I've definitely tried contacting them to get this fixed, but it kind of does the job because we see the same exact stuff happening in live markets. So we've rejected, closed, and now we're starting to break the lows here again, right? So now you go back up. Make sure that you're using higher time frame confirmation as well. So regardless of whatever's happening on the 30-minute and 15-minute time frames, you want to make sure that you're still getting your confirmations on higher time frames, hourly, making sure 4 hours also in a line, because we do have this consolidation that's being shared from higher time frames down to lower time frames, right? So you want to make sure, and that's one way that how you're going to let your scalps turn into swing trades. So we still have price kind of struggling to continue. So we're pretty much just waiting, right? You want to be patient with it because we are going to have moves regardless of wherever price is headed. Everyone's cool with me kind of skipping through to see if we're going to head bullish or not?
Yep.
Alright. Alright, we gotta push up. Just wait for that confirmation. 4 hours, same thing. Just wait for that confirmation. That's another thing that I do if price is just breaking out of consolidation, it's coming up to another consolidation. You definitely want to wait for that clear out, or you will see price reacting to it. So if you want, you can start mapping out the exact areas. So you have this exact area of where you have another consolidation being formed. And then on the 4 hour time frame, same exact thing. That's another minor resistance. You had a little bit of a fake out. Once that's cleared out, you have coming back up to previous highs, 40 pips, could turn into easily about 105 pips. Alright, so we come right back down into the zone. Same thing here, just coming back down. So you had pretty much price coming back up tapping into other consolidation areas. So it broke out of this entire consolidation here, came back up, tapped into other consolidation areas up top here, and then you had a massive sell-off. So that's one way to figure out, all right, which one is the liquidity zone. So you got liquidity from this entire consolidation, and you got liquidity from this entire consolidation here. And then you have a ton of volume. So whenever price taps into a specific zone and then it continues down with a lot of volume, that's where it grabbed the liquidity from. You only really need like 3 candles for confirmation: the breakout candle, the retest candle, and then the continuation down candle. But you want to definitely make sure that you're using basic structure, you're using support resistance as the baseline of your trading, right? So here, continuation up, rejecting those areas, using multiple time frame analysis, and then taking your entries. I'm just going to extend that over as new candles are being formed. And then we can also check the 30-minute. So massive sell-off. So clearly at this point, we're going to wait for a break and retest formation, or we're going to wait for a pullback, and then we have our entry. So we have this 30 close coming up. There you go. Leaving a range, started off with a lot of bearish pressure already. So waiting for some sort of break and retest, and then we have our entry. Pretty clear so far for everyone. A lot of it was just waiting this week. And that's how it is for, you know, a lot of breaking out of consolidation areas and things like that. Are you talking about this retest for price to continue up? So even here, let's say you got your retest and then continuation up from here, that's your 20 pips. It's a quick scalp, 20 pips, and then taps into that 1 hour and the 4 hour minor resistance, and then came right back down. So yeah, that's 20 pips right there. Alright, so you got another 30 close, bearish, the next candle making a top wick. So what we want to see is a clear break and retest, something like this, and then a continuation down, or a continuation down, pull back, and make sure that you're respecting this 143,400 area as resistance, and then continuation down. So break and retest formation, and this is where you would start looking for your trade opportunities, but wait for some candle closes, at least the 15 close here, and the next one continuation down. So your confirmation is coming from the 30-minute time frame, and your entry is going to be based off of the 15-minute time frame, right? So see how we're using higher time frame down to lower time frame analysis, you're starting to break these 4-hour levels, this entire 4-hour zone. You're starting to break that, continue down. Same thing on the hourly. We're starting to clear out all of this price action that happened here, break rejections, candle closes, consolidation areas. And then on the 30-minute time frame, you're getting that confirmation for a sell opportunity that's definitely coming up. And then on the 15-minute time frame, we just want to make sure that we have a 15 close to continue down. And then that's where your entry is going to be. And the reason why I want to wait for that close at a minimum is because on the 15-minute time frame, you have that consolidation right at that area, right? And we've seen how price kind of struggled to break the lows for at least like 2 15 candles, or actually 3 15-minute candles in a row, and then finally it continued down. You have a little bit of a pullback, so let's wait for that 15 close here to continue further down. So we're just waiting a little bit, but we already have our confirmations from higher time frames and down. So we have a 15-minute close coming up. Makes sense, right? Alright, we got the 15 close, break of low, and that's the entry. So we're still not breaking the low here, so we're still just waiting on it. The reason why I care about this is because this is also, any wick rejection is rejections of buyers or sellers. So even though this bearish candle here has a bottom wick rejection, that is still where some sellers were rejected, right? And then you saw that pushback happening, and that momentum carried over into this next candle. So if I don't see the low here being broken, then we don't have the confirmation for a sell. This candle could very well just create a support here, and then we could come right back into that 153,400 area or above. So these are like minor details, but this is kind of what helps you take those entries where you could have tighter stop losses. So on that 30-minute time frame, on the 15-minute you had that bullish close. On the 30-minute time frame, we left this entire range, this entire wick rejection right here. So that's why we wouldn't take the entry, even though this one doesn't have a top wick. We're going to wait until these areas are cleared out and then take the entry so we could have a tighter stop loss. So that's another reason right there. So we did have a bearish candle close, and then after that we came right back into the zone here. So now clearly when candles do come back down here after rejecting this, correcting this, massive seller's pressure, right? On the 30-minute time frame, you don't see any like bullish close or any sort of retracement happening. This is the market trying to correct that entire bearish momentum. because the market's never just going to move in one direction, right? We're looking at the most basic level of bearish structure, which is that entire sell-off. You got a support being formed here, and then pull back. As long as we don't really break above these resistance area or the support area for this consolidation and create a resistance here, and then continue down, we're still looking for a break of this area and then sell. This is still that liquidity area from higher time frames. So we're just looking at the most basic level of a bearish structure, which is that entire sell-off that happened, a pullback, and then a continuation down from there, and that's where your entry is going to be. Does that answer your question? So now we've created a resistance here. Let me pause that here. So this is that pullback that we're waiting on. We got that entire consolidation area right here. Right, that's the area that price pulls back to, and then now you've made that resistance continuation down. Break below this area. We're still looking for that break and retest now because price did pull back into that consolidation zone. Break and retest here, or even below this area, and that's your entry. So for sure our entry is going to be down here. We just need to wait for that break and retest, but price is following that basic bearish structure, which is that push down, pull back, and then continuation down. Eventually we will see a pullback happening. That's how a bearish structure moves, or at least a healthy one. So for sake of time, again, I'm just going to skip the candle. As long as we can close below or like continue below this area, get some sort of retest right into this area as a new resistance, and then continuation down, we have that sell opportunity. Is anyone confused at all about anything that we discussed here?
I'm good.
Alright. So we're coming up close to another 15 close and a 30 close. Alright, so you got the 15 close here, and this is pretty much where your entry is going to be, right? Anywhere in this area. And then let's do, keep it between 1 to 3%, visual mode. And then let me slow down this. So your entry is pretty much at the break of that, anywhere between the zone, anywhere here. See, get a pullback, a little bit more. So sell, visual mode, stop loss. We're still going to keep it just right above the resistance, just in case price does want to come back and retest those areas. And then drop down to the 4 hour. We're clearing the 4 hour lows here. So this is the area that we were talking about that we're going to target. So we're coming down here with a 6.42 to 1 risk to reward. And you can confirm that off the 30-minute time frame as well. So we're still going to keep it right above this. The reason why I would keep it up top here is because there should be no reason for price to break above this area now that we already have a pullback, right? And we're getting a break and retest. But if price does want to come back and kind of reject this area again, we're giving it enough room to create wicks, but not enough room so that it breaks above and comes back into the consolidation area, and then we get stuck in a much more loss in this trade. And going in with a 1% risk. So on any given day, whenever I'm trading, including scale-ins, I'm only going to keep it between 1 to 3%. So that means that if I entered with 1% right now, I have 2% available. And then when I scale in, I could go in with the 2%, or and max myself out at the 3%, or I could just enter with another 1%, and then I have 1% available still. And as always, if you guys want to enter the trade with me here on Zoom, feel free to do so. Or even on, YouTube, feel free to do so. So we're breaking the lows here. Same exact thing. I would confirm with higher time frames where we headed. So now we're starting to clear out the lows here as well, continuing down. Check the 1 hour time frame, same thing. And so once we tap into this area, or kind of like start pushing around this area, then we're gonna take some partials here and then let the rest run. Any questions at all about the entry or partials or anything like that?
I'm good.
Alright. Another break and retest right of this level, continuing down. We're starting to clear out these areas, so anywhere here is really where you can start to look for your partials. Once you take the partials, I would personally reduce my stop loss instead of going to break even just yet. I would instead of going to break even, I would rather trail my stop loss. So I would reduce it just a little bit, so then after taking partials, so then I've still secured enough to cover any commission fees or anything like that. And then once price starts clearing below these areas, I could trail the stop loss, because at that point we know that price isn't really going to pull back all the way this high, but it is still going to maintain that bearish structure to the downside. So you have your trades. We got an 8-cent lot. I would close partial, close 50%, and then stop loss, we'll do visual mode, and then keep it right above this. So this is another resistance area that was being formed here. So we already cleared out these lows, but I'm still going to give it enough room if it wants to come back and retest these areas. But again, it shouldn't be going any higher than that. At this point, we know that there's a lot of sellers here who are being rejected on some lower time frames, of course, and then this entire pullback. But we still don't have the confirmation that price is going to continue the other way, right? Just simply looking at it, the way that the candles are, forming, we've already respected this previous broken support with the current break and retest. 30-minute is still quite bearish. So another area that we would want to be careful of as price approaches is this entire area right about here. Can anyone explain why we would want to be careful when price taps into this area here?
Previous consolidation in the past.
Right here, yep. And this is a 4-hour time frame. And then when you drop down to the hourly time frame, you see resistance areas being formed here, and then you see a nice sell-off. Same exact area where price kind of creates that break and retest, and then you have a ton of volume. So you want to be careful when price taps into this, because clearly there's some liquidity. We have a 15-minute candle close coming up. Would that second break and retest be a safer option? Yeah, so this is another option that you can take, and then you could have a tighter stop loss right on top of the candle. So now we're clearing out these areas. This is where you can take some more partials. So I would close part right into this area, close another partial, let a very small position run, and then move my stops or trail my stop losses down here. And the reason why I would do that is actually, let me do that right now, and then I'll explain it. So I would keep it like somewhere, let's keep it right around here. So specifically this area, because that's where we've created support, price broke below that, and then this is also where price created support and its resistance for all of this consolidation. So this is about 10.5 pips into profit, not much. And another thing is, it's right below that break and retest as well, right? So on the 30-minute time frame, we already know on the 15-minute you get a break and retest. But when you go up to the 30-minute time frame, you see how we've kind of overextended in the sells. It's the same exact thing that happened here. we're eventually going to come into some area either here or continuation down or something, but we're going to come to another volatile area where there's a lot of liquidity. We're going to create another support like we did here, and then we're going to have a pullback and then a continuation down from there, still respecting that bearish structure. So in this area, we take the partials, we wait for price to create some sort of support, pull back, and then when it gives us a new resistance, that's when we look for a scaling opportunity. Everyone cool with me kind of skipping through? Alright, cool. So we're clearing those lows as well. Same thing on the hourly. We're starting to clear out all of these lows here. We're coming to that area where we want to be careful. Alright, so we got that wick rejection, we got a bullish move up here. 30-minute aligning with the same exact area here, right? So in this case, this is where I would look to either trail my stop loss even lower, just in case the trade does continue down, or you could close out your entire trade, wait for that pullback, and then look for another entry. So in this case, let's try to trail the stop loss, and then let's see how low the price continues. I would highly suggest just closing out the trade if you've held on to it for quite some time, and then your style of trading is not really like day trading, it's only scalping. So by this time you're probably done with the trade, but you can still trail your stop loss to see how far the trade's going to go. So this is 30 pips into profit. I'm going to keep it down here right into the support area, so if price does pull back, kind of respects this area as new resistance and then continues down from there. But if price breaks above that, then obviously we would look for another entry. I'll just skip through here for, again, the sake of time, as price is fluctuating. Now we're starting to reject the zone. Same thing on the hourly, new hourly candle forming. 15-minute already created the support and it's pushing up. So this is where you would make the decision. Again, you could trail your stop loss or just close out the entire trade. At this point, we know that there's been a massive seller's pressure across time frames. This is the last retest that we had. So I would personally close out the trade and then I would look for a re-entry. So I would close out this trade. So far made a 2.45% equity increase. Now we're going to wait for some sort of pullback, at least on the hourly time frame, and then a continuation down from there. Make sense? you get a push up right into that area, grabs volume, pushing up. Creates support, starts breaking highs. It seems like we're creating some sort of resistance here. This is the Asian session open. Yeah, so it seems like price is kind of consolidating around this area now. And the way that you can tell is, let me see if I could use the same zone from here. The way that you can tell is price is actually kind of rejecting this area, same exact area. The wick's not really breaking the highs, but candles coming back up and kind of closing to the same exact zone. So that's one way to tell that price is starting to consolidate. So again, that's not something that you want to be a part of. We finally start breaking down. We're coming below this zone. At this point, you would just wait for this 152-100 area to be cleared out. If this area is cleared out, then you have a sell opportunity. But if price just pulls back and it just kind of hanging around this area to collect more orders, then you would just wait for that basic support break and retest formation, and then look for your entry. So even on the 4-hour time frame here, we're still following that structure. There's only two ways that the market's going to collect orders: retracements or consolidation. So we're still kind of following that that bearish market structure. You had a little bit of a fake out there, but so far we're still just creating lower lows and lower highs. So you got your entire high being formed here, push back down, creates a low, pulls back up. You're kind of in a line with previous consolidation areas, comes back down, creates a new low, new high, comes all the way down here. Same exact area where we tried to fake out before, continuation down, and this is where we're creating a new low, right? So now the market's either going to consolidate like it did here and then continue down, or it's going to give us a pullback. There's only two ways that the market's ever going to collect orders. There are definitely minor fundamentals that were coming out during this time. I'll go ahead and pull up Forex Factory. Let's see here. So during this time, this is the entire week. So during this time, London session, you had a ton of Euro news coming out, so not so much for GBP. And then you had a bank holiday on Monday, so not much volume. That's where we saw this entire consolidation happening, right about here. And then continuation down on Tuesday, you had PMI news coming out in New York session, not so much happening with GBP. So it was, break and retest structure. That's all we were looking for during that time. On Wednesday, so around this time right now, you had JPY news coming out, bank lending, which obviously dropped here. And then you also had in New York session, you had job openings coming out. GBP, you had the HPI coming out. So it's minor fundamentals that are coming out, and which is kind of helping the movement on lower time frames like the 15-minute and 30-minute time frame. That's where the fundamental effect comes into play, right? That's why if you're trading any session opens or close and you have news coming out, even if it's just a yellow folder, that's why you kind of just need to know the gist of it. You don't need to know exactly what HPI is and everything that's comprised of, or like even memorize the data points, right? If you're trading or if you're scalping session opens and close anywhere around these yellow folder, orange folder, and definitely red folder news, then you just kind of need to know the gist of it. Just be aware of it. You don't need to kind of be an economist or anything. And then Thursday, we had unemployment claims coming out. And today, not much either. But in London session, you did have Governor Bailey speaking, so this is where we saw, like, we're going to see some volatility around this area as well. So whenever there's a central bank personnel speaking, you definitely want to pay attention to that. What other kind of formation should we look for? Simple structure. Just look for that, and then look for higher time frame down to lower time frame confirmation like we are, right? We're waiting for the lows to be broken. We've identified some zones. That's all I really stick to. Just the basics. So we're seeing price kind of still struggling around this area. The fundamentals won't change the structure, but they're going to help you find better entries. So for example, if, let's see here. Let's say you're trading any USD pair, right? And you have, where'd it go? There's economic, there you go, economic optimism coming out. If you're trading any pair, obviously this is going to affect it, right? Where's the economic optimism coming from? It's from consumers. Who's the core of any economy? Consumers, right? It's giving you the 6-month economic outlook, personal financial outlook, confidence in the federal economic policies. If consumers don't have an optimistic outlook for the economy, then obviously whatever their behavior is, whatever their decisions are going to be affecting the retail side, which is going to affect the manufacturing side. Eventually it's going to roll into the financial services as well, right? That's exactly what we see happening over and over again. The core of any economy is the consumer. So it seems like we're coming right back into this little consolidation here. Daily time frame, new daily time frame just made a bottom wick rejection, respecting the previous bottom wick. Seems like it's pushing up a little bit, but we need to see some clear pullbacks on higher time frames, and then we have our entries. Yeah, not a problem. Yeah, it's pure price action. Do I not have this? Give me 1 second here. Okay, there we are. So at this point, for any continued sell opportunities, we need to see a pullback happening, anywhere into kind of like this area here. Specifically, I say like somewhere in this area where you have that break and retest support, you have that consolidation resistance being formed, and then you also have this wick rejection support being formed. So anywhere like in the ballpark area, anywhere into this kind of zone here, this is where we want to see some sort of a pullback happening, or just consolidation in the zone, and then a continuation down. And then we have a nice entry. As long as price creates some sort of resistance or consolidation and then continues down, then we have an entry. So ideally, after catching our entry, so open right here, so this is where our entry was, and then we closed down here, so this is about 75-76 pips. After catching that much momentum to the downside, so we closed partials at around 35 pips or so, the entire trade was closed around 70, 75, 78 pips, around that area. So after catching that big move, you would pretty much let the market breathe a little bit, retrace a little bit, and then come back the following session. Or if this is like New York session, then you would probably come back in London session. You want to let the market breathe a little bit in Asian session, pull back a little bit, collect orders, and then continue pushing, and then that's when you would come back and then look for your entries in London session. Make sense? Awesome. So 4 hour made a top wick rejection, rejecting that area still. Would it be more helpful to see the zone here? Just to visualize it better? So like specifically somewhere in this area here. When you drop down to the hourly, so you didn't really have, even though there's like this entire push up, you didn't really have any confirmation for buy opportunities, right? Even on the hourly, we closed above and then came right back into the zone. So I'm going to skip through again because there are 2 other entries that I do want to cover here today. So you get that wick rejection right into that area. So now we need to see some sort of resistance to be formed. Let's drop down. So we got that resistance being formed. We need to see some sort of break and retest, and then we have our entry. The annotation tools, they're just rectangles. And then I'm using the annotation tools from Zoom as well. The arrows and all of that. Everyone's following along fine so far? Any questions? Cool. Massive top wick rejection, respects the previous lows. We're coming back down into the zone here.
Vijay,
Yes.
I have a question. Like, how about the psychology and the emotions?
If you're just doing it from an analytical way, there's no room for emotions, right? All we're doing here is just following structure, using support resistance. If a support is broken, then you wait for that retest, following, just normal market structure, and then taking the entry. And then if a resistance is broken, then you wait for the same exact thing. Wait for a pullback, normal bullish structure, and then taking the entry, right? It's just purely analytical. There's no need for emotions, right?
Okay. So this is the part that struggles the most.
What was that?
So this is the part, like psychology and the emotions. This is the part I struggle the most.
Yeah, I think that's something that a lot of traders struggle with, the emotions. But again, just look at it from the most basic level, which is structure. You know how to do like higher highs and higher lows, right? You know how to draw that. And then you know how to draw support resistance. And just use that. Whatever other strategy that you have on top of it, that's supplemental, right? Fibonacci's, indicators, whatever else that you want to use, that would be just on top of market structure and support resistance.
Makes sense. Thank you.
Yeah, absolutely. So coming right back into the zone, let's see, pushes back down. Let's see if we can clear out some areas here and then take the entry. So we're consolidating at the same exact area that we've consolidated at before. Collecting orders, impulsive entries, many times they don't retest. So impulsive entries are usually going to come after price has consolidated or it's breaking a key level. So for example, let's see here. So in this case, I'm gonna go ahead and pause that while I explain it. In this case, you have that entire consolidation area, right? And then you have consolidation here. So as price kind of approaches a support or resistance area, whichever one that it wants to break, you're always going to see some form of break and retest. So here, if you break it down, again, you would just be zooming in and stuff like that. But if you just break this down, you have a resistance area that was forming here, right? And then narrow in exactly on that support right about there. You got a resistance that's being formed here. You have all these candles that are closing below this area right here. You're getting that little bit of a break and retest formation. You're starting to see the candles breaking the lows here. So that's the lowest that this candle has been, or any candle in this entire area has been. And then the next candle makes a top wick rejection and continues down. That's your entry. Or if this candle closes with a lot of volume, closes bearish below the consolidation, and the next candle continues down, that's your entry to the downside. Make sense? If this candle closes with a lot of volume and the next one fails to break the low, and then it comes right back into the zone, then you didn't have a trade. But if this closes with a lot of volume and the next one continues down, then that's your trade. I'll slow it down again as we get closer to the candle close. So we're coming up to a 15 close. Let's see if we're going to close below this consolidation. So we did. Seems like price wants to continue down. So this could be one of your impulsive trades right here. So actually, let's test that out. Let's say you take an impulsive trade here, but your stop loss now is going to be like somewhere right above this consolidation area because you want to give it enough room. In a case like this, I would go with 1% and then start looking for your scaling opportunities. So actually, do you want to go with 1% or 2%? I'm going to let you make that call. We're going to stay between 1 to 3%. We're not going to go the full 3%. So do you want to go with 1% or 2% on this trade? Everyone's saying 1%. I'm waiting on Brian. Seems like everyone's kind of on the same page here. Yeah, so this is the impulse entry right here as this candle breaks the low. So even on YouTube, which percentage do you guys want to go with? I have a majority of people saying 1% here. 1% or 2%. Okay, he wants to go with 2%. We're going to go with 2% here. Visual mode, you're going to have a sell. Stop loss, we're going to keep it right above the consolidation area. So we're going to give it enough room to come back and retest the support of this consolidation. But we're going to keep it tight enough so that if price goes the other way, one, we don't want to be part of like any further consolidation here, or if price continues the other way, right? And then we'll use higher time frame levels for our TP. Do you want to keep it at this support or do you want to go even lower? On the daily time frame now, you have this entire break and retest formation, and then you have a bearish candle here trying to continue down. 4-hour time frame, we've already made that resistance, so we could target this, and then if there's like any potential opportunities, we can continue down. This was actually around the area where I took PC, this is the computer. This is the same area where I kind of took this entry, and then the TP here was 151.300. So we'll keep it at 151.300, and I'll show you guys exactly why I did that one. So that 151.300 on the daily time frame is this wick fill. And that is again simply following structure, where you have that high being formed, and then you have that continuation down, right? So you got your high being formed right at this level, you got a low, that entire wick rejection, pull back, you got a lower high being formed, and so now here the analysis was price continues down, you're getting your confirmations, and we're going to come down to fill the wick here, 151.300. So that this is the same exact entry that I took pretty much, but mine was a little bit of a different level, but we'll keep it the same because this is the second entry that I wanted to show you guys how to take that entry as well. So that right now is a 19-to-1 risk to reward given our entry. I forgot to press play. Yep, sell while breaking the lows to target that wick fill. So make sure that if you're looking for sell opportunities, that your price is creating lower lows and lower highs, and make sure that you're following, support, resistance again, and then take your sell opportunities as you get your confirmation. So we're coming into Thursday now. So this is where you want to be a little bit more conservative. This is where you're going to start taking partials once you're kind of done with your trade. Or like you're hitting key levels is what I should be saying. Once you start hitting key levels, that's when you start taking partials. Try to go risk-free if you can. So my entry was around 152.495 area, so somewhere here once we had completely cleared out this consolidation. But this is pretty close, so we'll just keep it at that. So massive seller's pressure happening here as well. Same thing, you're just looking at structure. 30-minute time frame, how do you know that there's massive seller's pressure? Because a lot of volume in these candles. The next one didn't even start with a top wick, right? It just started off selling and then it closed without a bottom wick rejection, so sellers were still not rejected at that time. The current candle, again, started with no top wick whatsoever and it's just continuing down from there. So a lot of seller's pressure. Now we're coming back into that area, that 300 area. Same thing, we're grabbing that liquidity again. So another thing that I want you guys to notice is a lot of times I hear like a lot of people saying like just focus on the most recent price action. You don't need to focus on, whatever's happened to the left. But as you guys can see here, price has tapped into the same exact area so many times, and you see volume follow right after, right? You've seen price reject this area a lot of times. And that's exactly what's going to keep happening. If price has consolidated in one area once, twice, or even maybe 3 times, the chances are that price is going to consolidate there again. the more price consolidates in the same exact area, the probability of it consolidating in the same exact area continues over and over and over again. So let's skip through. So now if we're going to look for any other sell opportunities, we want to make sure that this 152-300 area here, that price is kind of reacting to right now, is completely cleared out, and then we take our entries. Hello, hello, thank you. So now that we've tapped into 152-100 area, which we've also marked off, take some partials here. Close part, close 50%, and then you could trail your stop loss. Keep it kind of right above that wick. And then let the rest run. When I'm scaling in, I'm looking at the risk percentage that I have left available. So in this case, we entered with a 2% risk. So that meant at that time I only had 1% risk remaining. And then after we took partials, now we only have 1% risk running, right? So now I have 2% risk that I still have available. So now when I'm looking for a scale in, I can enter with 2% and max out at the 3% that I usually stay kind of between. Or I could just go in with another 1% and still have 1% risk remaining. So now we're starting to reject the previous hourly wick. And here you have another break and retest. So this is another entry that you can take. So for the question that was asked for the scaling in, so here for example, I would go in with just 1% risk, so then I still have 1% risk remaining overall. And then you could do, now that we've created resistance here, and then continuing down with the break and retest, we've cleared out 152-100. There should be no reason for price to come back up into these areas. So stop loss, again, keep it right above that resistance area, keep it tight enough, so then you give price enough room, so it's right above that wick there. So you give price enough room to retest levels if it needs to, but if it goes the other way, then you're taken out without a lot of loss. And then same thing, same TP down here, which is that wick. And that's a 3.73 risk to reward now. And 30-minute also breaking the lows. So I'll skip through again. A lot of seller's pressure. And that's TP hit. So just staying between 1 to 3%, we made 32% on the trade, and that's pretty much how you would catch any of those sell opportunities. There were buy opportunities today that happened, but we'll go over that. I'll make a breakdown video for that one. We're coming to our time. So looking at our trades, stats. So that week, just risking between 1 to 3%, you would just go between $325. You would make $325 based off of that. I chose GJ because earlier in the week, someone asked me on Instagram to make a breakdown video on how to catch some of the sell entries, because they did watch my analysis video, but they weren't able to catch the sell entries. And so I thought it would be a good idea to do it as a simulation session, just so everyone kind of understands how to manage the risk while you're in the trade, how to take the entries, and then how to do the entire analysis as new levels start forming. So I hope this was helpful, and then if you guys have any questions, as always, feel free to reach out. I'm more responsive on Instagram, so if you message me on there, then you'll probably get an answer much faster. But I hope everyone has a great weekend, and get ready for the next week.